The JSE is down with global markets also mostly weaker as a rally sparked by an improved U.S. interest rate outlook seemed to lose steam. Mamokete Lijane is Standard Bank Strategist of Global Markets, and she joins us now to take a look at the latest market moves. Thank you very much, ma'am, for your time this afternoon. So the rand is weaker today after what now looks like a short-lived rally. What's driving the declines?
I think, it's very early days yet to start to think that the trend that we saw starting last week, where it looks like risk on was back again, and the market was taking heart and risky assets were rallying on the basis of this view that you were at the end of the interest rate hiking cycle. It's very hard to say, what we've seen in one day is enough to derail that trend. Having said that, I think we have to recognize that, the underpins of that view were fundamentally quite weak. We still need some confirmation coming from further data in the US that the economy there is actually really slowing, as suggested by the jobs numbers last week, in order to start to price that in as a longer term trend. I think also, the outlook around risky assets and the dollar, etc., remains complicated by this idea that global growth remains quite weak. The U.S. economy remains quite strong, while slowing remains quite strong. We're not sure where we are relative to this view that the U.S. economy is going to have a recession or not. So there are a lot of question marks. I think the environment remains very, very, very uncertain. And it's also quite binary, because if you have a recession in the U.S., it would mean that risky assets have got to weaken, which is sort of like the beginnings of a weaker trend. If you have a softer landing, it might mean that risky assets continue to rally. So there's too many question marks at the moment, within the outlook and the economy, etc., and we're still waiting for points of confirmation in order for any one of the narratives that could potentially take hold to consolidate. And I suppose that's my answer, is saying, the market was overbought anyway, the dollar was oversold, so maybe there was an opportunity for the market to have a bit of a hiatus, but also that, the narrative that was driving the rand stronger, the dollar weaker, US rates lower, itself is quite tentative, so you can't really hang anything on that.
What does it mean when the dollar is oversold?
I think that there is a sense in which, if you look at how quickly the dollar moved between, say, Wednesday last week into the FOMC meeting on Thursday and into that job report on Friday and into yesterday, that was a very rapid move. So typically what happens when you have as fast a move as that, you often have like maybe a few trading sessions where the market just kind of finds a level until it resumes, the trend that you saw. So I think today is not enough data to confirm that this is an actual pause in the rally in risky assets or in the sell-off in the dollar. But I think there is enough, uncertainty around, that view that the dollar should weaken in the short term, that you can't just take this pause as a pause versus maybe a stabilization, and creating the basis for a reversal. But I think, my view is that you could still see a few trading sessions of dollar getting stronger. Equity markets are looking okay. Risk is looking okay. And we still do need, further data points to confirm that, you really are out of that kind of like, much stronger environment for dollar, and you're moving into, a regime that supports a weaker dollar on a more sustained basis.
Sibanye-Stillwater has finalized a 5-year wage agreement with AMCU and NUM for its Krondal PGM operations. Talk us through those developments.
Yeah, so, by the looks of it, the company has settled a multi-year agreement, 5 years, at inflation, and for the next one, the next settlement is around 6%. I think it's a really positive development for the company in two ways. Firstly, it says that, you've settled at a wage increment that is in real terms still quite contained, but also you've got a multi-year settlement, plus you didn't actually have any strikes and work stoppages in order to reach this agreement. It signals, I suppose, that labor relations within the sector have come a long way. That the company has got really good relationships with labor in their operations, and it also does That's the first one. The second one is that it creates a nice base and nice visibility for wage costs going forward. And it also lowers the risk that between now and year 5, you're going to see work stoppages as a result of that. So I think on the whole, it's a very positive development. But also, I think if you look at what is happening in the mining sector compared to the rest of the economy, and you look at where wages have settled across the rest of the economy, it's been really pretty much below inflation, where workers have actually taken, on the whole, real wage losses. Whereas in the mining sectors, people are still able to at least, meet inflation and maybe even beat inflation to some extent. And I think it signals the relative strength of the sector relative to the rest of the economy. But I think, that every time I see a settlement that is multi-year, that is without strikes, and you look back historically at where the sector has been relative to, the labor relations, it's always a heartening development.
Is it really? Because Impala Platinum is offering voluntary job cuts to workers in a bid to cut costs as prices for the metal fall.
No, I mean, I think, that is one other story. And I think that's more reflective of where we are in terms of the metal cycle, in terms of a cyclical argument. So, these mining companies are coming from really bumper profit and margin years in 2021, 2022. And 2023, platinum prices have come off quite a bit. If you look at the PGMs, platinum is down almost 20%, palladium is down 30%, rhodium is down 60%, and that's just year to date. If you look at it where they are relative to their peak, prices are down materially in the past 2 years. So, margins are being compressed in the sector. And I think it makes sense then that from a cyclical perspective, when companies are looking at their cost basis, they'll start to look at one of the biggest costs that they pay, which is around wages. And I would think that is more a cyclical adjustment to it being a structural adjustment. So one would expect that when the metals cycle, the global economic cycle turns again, you will see companies start to take up more employees again. But there is a certain level of flexibility that I think is reasonable, given how volatile, commodity prices can be. And it's unsurprising then that at this stage in the game, when companies are looking at this year and into next year, the outlook for commodity prices is quite muggy in the context of a strong dollar, high prices, and what is turning out to be not as fast a green transition as what maybe people expected, that they pull back a little bit and create that space that when they do have a recovery, they can expand again. So I think that is more a cyclical story, and it makes perfect sense that companies would look at their cost bases and try and manage their costs through the cycle.
Thank you very much for your time this afternoon. Global Markets Strategist at Standard Bank, Mamokete Lijane.